it's picked up. I mean, for the major banks, we're now running, according to the the BOJ figures, at a little bit more than 4% per annum. But we've now got to factor in some degree of inflation. So rail growth is probably no more than 1.5%. But yes, there has been an improvement, far less so at regional institutions, where the demand seems to be more sluggish than it's been. And of course, overseas, underlying demand has weakened, but the translation into yen does provide a considerable offset to that.
Just really quickly to that effect, because obviously these major banks that reported today, they source a lot of overseas loans at the same time. It's a staggering amount of their loan book. But are you, and to Tanvir's point just then, are we seeing any kind of a contraction in credit growth or any kind of pressure when it comes to Japan domestically versus, that they have that offset where everybody wants to come in and borrow cheap on the yen?
I don't think that we're certainly not seeing a contraction at the moment in domestic yen growth. If anything, that's picked up a little bit. I mean, to what is historically now a relatively strong number, and if we exclude the immediate post-COVID period, as I say, we're over 4% on domestic loan growth. But I think the point that was being made there of asking corporates to pay for money when they haven't been asked to do that for 30 years, certainly creates some issue around credit quality, and we'll have to see how that shakes out.